Good morning, I'm Julian Roberts and I'm joined this morning by Simon Goodson, Director of Investor Relations at Rolls-Royce. Morning, Simon.
Good morning.
First off, since the full year results, you've announced the sale of the gas turbine business to Siemens. Can you talk us through the rationale behind that and perhaps the timelines involved as well?
Certainly. We've had an energy gas turbines and compressors business for a while now, which has been underperforming. We've made it very clear that all options exist for that business in terms of fixing it, in terms of partnering or disposing. In the final analysis, we reached a great deal for Siemens for the business to take the business forward. And most of that is to do with scale. We think it would require simply too much investment from us to achieve the type of scale, and that's feet on the ground around the world in the various markets in which that business contracts. So we've decided to do that. That sale will take place towards the end of the year, and then we'll use the funds for £1 billion buyback.
And can you talk us through actually the timing of the buyback and perhaps the metrics that you might use to decide on further buybacks in the future?
Well, this is a discrete buyback, which we've made it clear is related to the sale of the energy business itself. The buyback will be around £1. It won't take place until the completion of the sale. So the sale will take place towards the end of this year. And then thereafter, it will take place, the buyback itself, over a reasonable time frame thereafter, probably measured in months rather than in years.
And it presumably linked to the announcement that you are not going to make any near-term major acquisitions. Is there more to say behind that?
Certainly. As we look at the balance sheet and we reflect on the amount that we have to do today and the management bandwidth that goes with that, we've clearly got a lot on our plates. We've got a record order book. We've got to integrate Tognum, which is our power systems business, our high-speed reciprocating engine business. So we feel that for the foreseeable future, we will not be pursuing major acquisitions, which is why it makes sense to return capital to shareholders in this way. In terms of the metrics, we'll simply have to weigh those up over time.
Was there specific feedback on the Wärtsilä deal from investors?
From major shareholders, certainly when we announced that we had had discussions that had stopped, I think that surprised some of our investors. Since then, we've been working through that with them, and I think many understand the industrial rationale that goes with medium-speed reciprocating engine business, and indeed the strategic rationale. I think to the extent that any transaction of that size were ever to happen, then of course we would need to be able to convince our shareholders of the financial rationale, and that's certainly very clear in our minds that we would have to do that.
And just back on Tognum for a moment, how long will it take before the second half of the business that you're buying back from Daimler is fully integrated into the group?
Well, full integration will take a little while yet. It's taken us a bit longer than we would have liked to get our arms around the business, and indeed at the moment we're working on acquiring Daimler's 50% share in the business, a transaction that will take place over the coming months. So again, it's expected to happen before the end of the year.
Over what period of time does Rolls hope to catch up with the levels of operating margins achieved by General Electric and Pratt & Whitney?
Well, I think like-for-like comparisons are quite difficult. So provided that we are comparing like with like, I think we still have some way to go in terms of progressing our margins. I think our major competitors have had the advantages of unit volumes for some time, particularly coming out of their narrow-body businesses. And Rolls-Royce sits at the foothills of major unit volume growth for the very first time, and that gives us some natural advantages through volume. But also that volume gives us the opportunity to reduce cost along the way further. So there are a lot of opportunities, and we would expect to progress margins and indeed cash over time.
Clearly a disappointment that Emirates decided not to buy Airbus A350s. Do you think that has any implications for other major airlines?
Well, I think firstly it's unclear whether Emirates at the end of the day will or won't order A350s. It's certainly true that they have cancelled their existing order of 70 plus aircraft. However, the capacity that they require for those aircraft is still there, and those slots were not due to deliver until the end of this decade. So there's still some time. None of that, of course, we think impacts the success of the A350 program itself. As far as we're aware, the aircraft testing is going very well. We're certainly very pleased with the way the engines are performing as it leads up to its entry into service with Qatar later this year.
Do you think there's anything at the moment that the market's missing in the Rolls-Royce story?
Well, I think a lot is expected of us. We've been around now for over 100 years, and I think there's always the danger of thinking that we are a mature entity. When you're sitting for the very first time at the foothills of major unit volume growth, clearly an awful lot can happen in terms of the progression of the company with that. So I think that as investors work with us to understand where the exact inflection point of margins and cash conversion comes in absolute cash performance, then I think they will be reassured. So a lot for us to do over the coming years. But if there's one single thing that I think is really not quite as well understood as it could be, it's really the length of the aftermarket tail that comes from this. Now, we understand perfectly well that some investors' time horizons are measured in minutes and hours and weeks and months and a few years. The length of the aftermarket on some of our businesses runs for decades, 20, 30, 40 years. So we often would say that not many people can say that they will be delivering products in 2020, 2025 that will still be flying in 2050.
Hence, I suppose, the emphasis on total care at the recent Investor Day.
Indeed. Now, Total Care is our flagship product for aftermarket services that transfers the risk from airlines, the risk of maintenance from airlines, to Rolls-Royce itself. That's certainly appropriate in the first part of the product's life cycle, which could be 10, 15 plus years. In actual fact, we know that most of the aftermarket services, however it's contracted, whether on Total Care or on time and materials, we feel that we are best placed to service that. It's just how the airline itself chooses to do the contracting.
Simon, thank you very much for joining us. If you would like any more information, please look at the Edison website.